Hello, welcome to Economics 101, your number one source for everything economics. What if one narrow stretch of water could quietly decide the direction of the global economy? Because right now, the big question isn't just tension in the region, it's whether or not the Strait of Hormuz is open or not. And that single detail could determine everything from oil prices to inflation and even your investment portfolio. In today's video, we're going to break down a couple different things. Okay, to start off with, what it means when the Strait of Hormuz is open versus when it's closed, how each scenario impacts global oil supply and prices, and what that means for inflation, the Fed, and your wallet. And trust me, it isn't just another headline. Whether that strait stays open or closes, even partially, could trigger a massive economic chain reaction. Before we jump into the video, though, I do have a quick favor that really helps grow the channel. If you find value in the breakdown like this, consider liking the video and subscribing. It helps more people understand what's happening in our economy. All right, we're going to go ahead and dive into it. Let's start with the basics. The Strait of Hormuz is a narrow passage between the Persian Gulf and the open ocean, and about 20% of the world's oil supply flows through it every single day. That's roughly 20 million. That's roughly 20 million barrels of oil per day. So when the Strait of Hormuz is open, global energy markets function relatively normal. Oil flows, supply chains stay intact, and prices remain tied to typical oil supply and demand dynamics. But if the strait is restricted or if it's closed, even partially, you're instantly removing a massive portion of the global supply from the market. And in economics, when supply drops, suddenly prices don't gently rise, they tend to spike. All right. Um, so I'm gonna give you a couple of oil price scenarios. Okay, let's talk numbers. If the Strait of Hormuz remains open, oil prices might stay in a relatively stable range. Let's just say $70 to $90 per barrel, depending on the broader economic conditions, right? But if it becomes disrupted or closed, that's when things change really quickly. In a partial closure scenario, oil could jump past $100. In a severe disruption, analysts have historically estimated prices could surge 120, 130, even 150 per barrel. And here's the key point: oil isn't just oil, all right? It impacts pretty much everything, all right? Gas prices, shipping costs, airline tickets, food prices. So when the strait is open, these costs they stay relatively contained. When it's not open, the shock spreads across our entire economy. All right. Next point I'm gonna get into deals with inflation. Basically, uh, our price is going to be stable versus surging. Okay. When the Strait of Hormuz is open, inflation is relatively cool. It remains calm. Okay. Energy prices stabilize, transportation costs ease, overall inflation trends lower. But if the strait is closed or disrupted, that progress can reverse very quickly. Higher oil equals higher transportation costs, higher prices for almost everything. All right. We can see inflation, which might have been trending around 2 to 3%, depending on where you get your numbers from. You could probably see inflation start to climb back higher, 4 or 5%. All right, if it gets out of control. And consumers feel this immediately. We feel this. Me and you feel this instantly. Gas prices jump within days. We've seen that happen. Groceries prices will rise within weeks. Rent and services follow over months. Okay, that's kind of how you can look at it. So whether the strait is open um, or closed, or it affects how inflation is on our daily life. Okay, so what does the Fed do in this type of situation? All right. Now here's where things get a little tricky. If the Strait of Hormuz stays open, the Federal Reserve has more flexibility. Inflation cools, and they can focus on stabilizing growth or even lowering rates over time. But if it closes or becomes unstable, that creates the nightmare scenario. Okay, stagflation risk, slower growth, high inflation. So in a situation like that, what do you expect the Fed to do? Okay, got a couple options, right? We're gonna go over the options really quickly. Option one, raise rates to fight off inflation. Okay, that hurts growth though. All right. Option number two, you could cut rates to support the economy. That worsens inflation. All right. There's no easy answer to this, And markets hate uncertainty more than anything else. All right, quick pause right now. If you want more breakdowns like this that connect global events to your money, make sure you're subscribed. This channel is all about making economics actually make sense. Okay, let's hop back into it. So, what does this actually mean for you? Let's break it down uh, so that everybody kind of understands what it means for them. If the Strait of Hormuz stays open, things feel normal. That's the bottom line. You got stable gas prices, you got predictable travel costs, you got slower inflation, stable markets. But if it becomes restricted or closes, all right, here's what you more than likely will notice, or here's what you're going to get. You're going to get gas prices are going to climb. They're going to go fast, climb fast. Travel will get more expensive. Groceries will get more expensive. Market volatility will hit your portfolio. All right. And if it gets worse than that, you could be looking at a broader economic slowdown. So this isn't just a geopolitical story. It's a personal finance story. Okay. At the end of the day, the Strait of Hormuz isn't just a location, it's a switch that can either keep the global economy running smoothly or send shockwaves throughout our entire economy. And whether it stays open or not will determine how much of that impact shows up in your daily life. If you found this breakdown helpful, please make sure to like the video, subscribe for more economic deep dives, and drop a comment below. Do you think oil will ever get to $150 per barrel? Just leave it in the comments. Um, Again, thank you for tuning in. This is Economics, where we break down the economy so you can stay ahead of it. Uh, Please continue to watch, subscribe, share, leave a comment, and I'll see you on the next video. Thank you.